oh, yeah, by the way, I'm recording this session because the bank requires us to do video interview. Say if they can audit us anytime. So I want to keep it just in case if they do audit, if you don't mind. And the property of this property is 500,000. Mortgage also with Westpac, balance 380, also rate refinanced last year. Interest rate is 3.14%, interest only. Repayment $1,035 a month. We may consider refinance later on. So if you have any questions, you want to stop me, just let me know, okay? Neil, so I just want to recap what we have for Brunswick investment rental 1,420 a month. The plan is to keep. It's not necessary. You don't need to sell it based on your current financial situation. The value is for 420 mortgage with CBA, and currently owe 315. I refinanced probably three years ago, since with CBA. How long is this property been with CBA?
2.5 years.
Half years.
2.5.
2.5 years. Okay, 2018 roughly. Yeah, roughly.
Yeah.
Okay. And the rate is also 3.14.
Let me just confirm that. 3.69.
3.69.
Yeah.
Oh, quite high. 3.69 interest only, right?
Correct.
Yeah, interest only. The repayment maybe it's also it's how much it will be. Should be maybe more than that. Say 315 times 3.69. Yeah, 900. Yeah, you're pretty much 968 dollars per month. We may refinance or not, and same as idea. Okay, now the property you want to buy land and construction. The property hasn't been found yet, so you're not first home buyer for your home. It's for your home. The land will be up to 550,000, and the building cost will up to 350,000. Yeah, so the total cost will be around 900,000. So it will be for your home and to build house and land. So you're still looking for this property. So basically, you want to get a pre-approval so for you can make an offer for the land. Yeah. So that's good. Refinance, so let's discuss later. So the funds, that's my analysis on funding for your purchase. Now I'm focused on your purchase now with these slides. That's the main requirement. The purchase price total for land and construction total is 900,000. Stamp duty on the land is about 20,000, 20,200 something. Say 20,000. Lenders establishing cost mostly is free, but I put $500 just to cover just in case. Lender's mortgage insurance, you don't need a lender's mortgage insurance, which is good, and your legal costs for transfer land, it's estimated about $2,000 for your conveyancing cost. There's no loan to pay out because no cash out. All these are not irrelevant. So total funds you need is about 920,000. It's basically the stamp duty plus the total cost of house and building. Because your loan, the property is the end value will be around 900,000. So if you borrow 80%, which is 720,000, that is 80% LDR. So you don't need more lender's mortgage insurance, and you have a saving 200,000. So 200,000 plus 790,000 is 920,000. That's the funds available, which is perfect. You have enough money, including the loan and your saving, to buy land and build, which is good. Any points you want to add? Anything?
Not at the moment.
Okay, that's good. Let's move on to the next one. Now, your current situation, I think you are pretty much running a standard family household. Just I want to get some information, mainly on insurance side. Do you have a health or life insurance?
Yes, both.
How much do you pay for insurance a month, for example? So that's the most cost living expenses are standard, but insurance varies from people to people, you know. So.
I just typed in the answers.
Yeah, so roughly how much you pay a month for the premium, not covering, not balance, just you know, the insurance life insurance or health insurance, not super.
Yeah, so the I've just typed in the chat box the answers there for you.
What do you mean? Chat box.
Chat box.
What box? Chat box.
So if you just found the button where it says chat.
Which button? Ah, chat box in Zoom. Sorry.
Yeah.
Sorry. Let me open up the chat. Where is the chat? I can't see the chat. Where's the chat? Oh, checking. Yes. Okay. Yeah. All right. Cool. Health to 250 a month. Okay. Yeah. Still okay. Yeah. Life is super. Yeah. That's good. Perfect. Okay. Now, okay. Childcare. How much do you pay for childcare? Any idea? $60 per week. Yeah. And you know, child maintenance is not applicable. Private schooling, probably the kids too young. We're not in this age anyway. Okay. Now let's move to the next one. Now this is we're talking about the features of this is standard presentation. You have a variable rate and fixed rate, because you have a home loan for many years. So I don't think this is you are not familiar with those features. So it's a variable rate. You know, the interest rate can move up and down. Yeah. So that's pretty much standard. Those information mainly you understand what is variable rate. It's not a problem. We don't need to spend time on that. For fixed rate as well, I think. Have you used fixed rate before?
No, not yet.
Not yet. Okay, let me go through fixed rate, which is very interesting.
Yeah.
Because at the moment, a lot of people are using fixed rate. The reason is the fixed rates are much lower than variable rate now. Because fixed fixed interest rate loan are subsidized by the government because of the COVID. So it is unusual, but for the next 2 or 3 years, we'll see the fixed rate below variable rate. But the fixed rate means the interest rate, say if you fix, so you can fix interest rate for a certain period of time, for example, normally from 1 year to 5 years. So if you say, okay, I choose a 3-year fix, within these 3 years, interest rate is fixed. Also, your repayment also fixed as well. Yeah, so that's fixed rate. But there are some restrictions for fixed rate loan. First one, you can't make unlimited repayment or withdrawal. On a variable rate, you can make additional repayment, no restriction. You can also withdraw, but there's a restriction on fixed rate. Most bank only allows you make additional repayment up to $10,000, and you can't withdraw. So that's the main restriction on fixed rate. So they're not flexible. And also, there's one thing most people don't know for fixed rate is if we apply a fixed rate loan interest rate for 2.09% today, for example, and when you settle the loan in 2 months' time, if a bank increase the fixed rate from now before you settle in next 2 months, say to 2.29%, you are going to get 2.29%, not 2.09% as you applied for. So that's a risk for the fixed rate. For variable rate, it's not relevant because variable rate is open to change anyway. But the bank usually offers rate locking for you to, they guarantee the rate will not be higher, won't be higher than you apply for. But at current situation, the fixed rates are very unlikely to increase. So rate locking is there, but I don't think it is a risk for us. Any questions?
Sure.
Yeah?
No, yeah.
Yeah, so we don't need to probably, that's my opinion, we don't need to worry about fixed rate locking. The third one, main issue is if the loan is in the fixed rate term, if you want to sell the property, if you want to refinance, or if you want to pay out your loan, you may be subject to a breaking cost. It's like because you signed a fixed term contract with the bank, the breaking cost can be expensive. It basically is, say if you have a 3-year fix, in the end of the second year, you want to sell the property. So you have 1 year to go, right? So basically the bank will ask you to pay the remaining fixed rate, the rate for the remaining year. Basically that's the idea. Yeah, so that's the risk taking fixed rate, especially for the long-term fixed rate.
Mm-hmm.
Yeah.
Yeah.
Yeah. So that's the fixed rate. However, saying that, as if you don't have any plan in foreseeable future for selling property or whatever, we do recommend taking fixed rate simply because the rate is low. Yeah. I'll do some comparison, let anyone know how much you can save. Do you have any plan to sell any of these properties?
The only one is Brunswick, as I said.
Yeah.
If need be, yeah. If need be.
Yeah, if you have to.
Yeah.
But if you don't need to, you don't have a plan to sell just for whatever, for other reasons.
Yeah, the only thing was it's 7 years now, and obviously there is no more benefit hanging on to it.
But what rental income covers the repayment?
Oh, of course, it definitely.
Okay, that can be another consideration. If it doesn't cost you money, If it doesn't cost you money.
Yeah, yeah,
yeah, yeah. But we can always discuss that. Yeah. So whether generally speaking, fixed rate should be I think the fixed rate is not unsuitable for this way because you don't have a plan, the definite plan to sell.
The only question I have for now is, say we do a fixed rate on our own occupied home for now.
Yeah.
And then obviously we move from our own occupied home to the new property and make that own occupied home.
Yeah.
So if we fix these under as an owner occupied, do we leave that as an owner occupied, or we tell the bank that we've moved our primary location?
Generally speaking, you should tell you move your location. But if your existing loan is already fixed, the bank can't change it.
Okay.
Yeah, because they can't change the loan. You can't change it, they can't change it neither. Because you already signed the contract.
Sure.
Yeah.
So in that instance, that will be better, if I just fix this one as well at a lower rate.
Exactly.
Yeah.
Exactly. Yeah.
Rather than doing an investment loan.
Yeah. Yeah. Exactly. Yeah. Something I can't say, but you can say.
All right.
I can't give you this kind of advice.
Yeah.
You say that. Yeah.
All right.
Yeah. Let's say yes, but we don't need to fix everything. But you can take advantage of it.
Sure.
Yeah. So the main advantage is low rate.
Correct. Yeah.
Say if you want to fix, how long do you want to fix? 1 year, 2 years, 3 years, or 4 years?
I'll probably take 1 year at a time.
1 year at a time. Yeah, that's good. That's good. 1 year at a time. Yeah. If you take 1 year at a time, I will show you something very, very, very interesting.
Yeah, because obviously I'll be able to reassess my situations better, every year. If I look in for 3 or 5 years,
too long.
You're caught. Too long, yeah.
Yeah, that's good. Okay, cool. All right, let's move on to next. That's the fixed rate and repayment. Again, repayment. Principal plus interest repayment and interest only. You have both repayments now. So you already noticed variable principal plus interest repayment interest rates are lower, interest only is higher, but interest only repayment, especially for investment, allows you to control your cash, and you can focus on paying off your home loan and take advantage of taxation, negative gearing side. Yeah, so that's why people choosing principal and plus interest and interest only for different reasons. So I think you should want to take the principal plus interest repayment for your home loan, and because you want to build up your equity and interest low interest rate, and minimize interest rate and also you may consider taking interest only because you want to take advantage of, but let's compare the interest rate. Whether you want to pay high margin on interest only or not, right? So if you want to take, basically is for taxation purpose, basically. Yeah, so taxation is not for taxation purpose if you do want to take interest only. So how long did you set for interest only term for your current loan? 5 years?
No, 30.
No, you can't have 30 year interest only.
Oh yes.
5 years?
30. Yeah. That's right.
Yeah. Okay, now we can discuss later whether you want to continue with a fixed interest only or principal plus interest. That's offset account. So do you use offset account with Westpac now?
Yeah.
Okay. So you know how offset account works?
Yeah.
So basically, offset account is a bank account. Any balance in offset account after is linked to your home loan, and any balance on the offset account will offset the loan balance. And say in this situation, in this example, 20,000 sitting in offset account, current balance, your loan is 150, the bank calculates interest over 130. And interest is calculated daily, charged monthly. So you need to put all the money into your offset account as much as possible and as long as possible. Because you have a credit card, so you try to usually use credit card as much as possible. Keep your money in offset account.
Yeah.
Yeah. So I think for the new loan, you still want to have an offset account. Do you? Yeah, good. And the offset account can help you pay off the loan faster, access loan easier. For taxation purpose, do you know offset account can also have taxation benefit as well?
No.
No? Okay. So put this way, for your home loan now, 720,000 worth, current balance 405,000. Where do you keep your saving in offset account?
Yeah.
So your net balance is for 200,000 for your home loan.
Should be.
Okay, that's good. Okay, so you already are using the right way, because so the balance is 400,000, offset account 200,000. If you don't have offset account, you may have to put $200,000 into the loan, like make additional repayment, right? So your balance will reduce to 200,000. In that case, if you change this property to investment, the taxation will only allow you to declare interest costs over 200,000, not 400,000, because your loan is already reduced to 200,000. Even though later on you take the money out to buy another property.
Yeah.
The taxation only allow you to declare the cost of interest on the lowest point of the balance. But with offset account, even though your net balance is still 200,000, because your balance still shown is 400,000, right? So if you take offset account away, it doesn't change the loan balance. So that's that's the taxation. It's for taxing purpose. Some people are, especially say if some people buy a home and later on they want to change the property to investment, like your situation, we always recommend to take an offset account, park their savings. All right, but for you probably you are already using this way, which is good. Okay, now let's move on to next. It's construction loan. Have you used construction loan before?
Long time ago.
Long time ago. So you know the construction loan is progress payment, right?
Yes.
Yeah, that's the main difference. So the bank doesn't give you money to build, rather pay to the builder. That's good. Okay, so we don't need to worry about too much now. All good. Now loan preferences. You have a loan with Westpac and CBA. Is there anything you are happy with CBA or Westpac or not happy? Is there anything? So when we choose a new lender, we may take this into account. Is there anything particularly?
Well, particularly
you like or not like?
Well, with CBA the rates are higher. That's why we moved to Westpac.
Yes, high rate with CBA.
Yeah.
For the current Brownwick property, we're still with CBA. Why didn't you bring the property to the Westpac at the time?
So what was happening? I would be paying LMI if I moved across to Westpac, and to avoid paying LMI, I would either I would have to use up the savings.
Really? Okay. At the time, the value, the property were valued lower.
Correct.
Okay. Okay. Are you still on the package with CBA?
Yes.
You still pay. So Westpac is on package, premium package. CBA
Correct.
also with package.
Correct.
So you pay 2 annual fees for both
Yes.
packages. Okay.
Yeah.
Yeah. Both packages. Okay. Both loan. Yeah. Okay. Is there any particular you want to look at?
No.
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 Okay. Okay.
I would just go.
Whatever best deal.
Correct.
Yeah, exactly.
Whatever puts money in my pocket rather than their pocket.
Exactly. So you will consider variable rate or fixed rate because if especially when you do construction, it's likely you are going to have a variable rate construction loan. Yeah, and interest only for investment maybe, and principal plus interest for unoccupied. You want to take an offset account. Long term, for especially for refinance, your loan is already at about 27 to 29 already. You already say if we do refinance, do you want to keep the remaining 28 or 29 years, or you want to reset the loan to 30 years?
Refinance which loan though?
So say if we refinance, whatever loan, if we do refinance, do you want to say, for example, for your CBA loan, it's about 2.5 years, right? Your loan is already remaining long term is 27 years.
Yeah.
So if we do refinance that loan, and you want to keep the new loan as a 27-year term, or you want to say, I don't mind, I just want to take a new loan, also 30-year term. The difference is
the repayment.
Yeah, the repayment
interest
will be higher.
Repayment.
Yeah.
Yes. Yeah.
Repayment will be higher if you shorten the long term.
Correct.
But as a long term, interest cost will be lower because you pay the loan quicker. But repayment will be higher.
Yeah, but the other thing is, don't plan to hang on to that for any longer than a year.
For which one? For the
Brunswick.
Brunswick. You're not going to keep it for too long. So
No.
eventually you're going to sell it.
Yeah.
Okay, but not in near future though, right? Not in 2 or 3 years, or.
I was aiming in the next year, 1 year.
You're saying in next year you want to sell it?
Yeah.
Okay. So even though if you don't need to sell, you still sell it?
Yeah.
Okay. All right. So that's
because I want to modify the portfolio now. Basically by keeping that for the last 7 years, it hasn't done us any good in terms of.
So the value doesn't go up a lot. Okay.
No, not at all.
Not at all. Okay.
No.
For the rental also does rental increase?
Yeah, rental has increased. We have claimed the depreciation.
Yeah.
And holding on to it from here onwards is like no benefit.
If you sell it, you can free up some of your borrowing capacity. You can
Correct.
buy more better property.
Correct.
Yeah.
Correct.
Yeah, got you. Yeah. All right.
And what I'll be doing is I'll be probably buying it under trust account, family trust, because none of them are under family trust at the moment. So what I'll start doing is doing it under family trust.
Just be careful with that. If you do a family trust,
yeah,
the loan option will be restricted.
Okay.
Yeah, some loans are not available for family trust. Just be careful with that. You can end up it's slightly more expensive because some good loans, some features are not available for family trust. Yeah, just be careful.
Sure.
Before you decide, before you make a decision, let's have a chat again.
Okay.
And also how to set up, whether you're a personal trustee or corporate trustee as well. Some banks only support family trust with corporate trustee. Some banks only support with personal trustee.
Okay.
Yeah, that can be. Those are factors we need to consider.
Yeah.
Okay, so that's long term. Now this is a loans. Probably we don't need to discuss because we haven't decided whether we want to fix or not, refinance or whatever. let's talking about some deals first before we go to, that will naturally determine what the loan structure will be. Let's discuss that later. So let me submit this form so I can keep this record, and I'll also email you the link for this form so you can review, and you can also make changes if you want to. Okay. All right. So that's the link. Let me save this link. All right. Okay. I want to share some, let's say refinance first. Okay. Let me share the screen. This number, screen number. Can you see this spreadsheet?
Mm-hmm.
Yeah. All right. Chat away. Now, this is current situation. CBA, the rate is 3.68. That's your current situation.
The other one, the second one,
yeah,
3.14, it's actually 3.29, I think. One moment.
Okay, 3.29. Okay, yeah. 405 is Westpac 2.89, principal plus interest, repayment, this is current repayment. And these two are investment, interest only, this repayment, right? So total repayment so far is about 3,700 per month.
Mm-hmm.
And you pay two annual fee. Annual fee is 790.
Yeah.
Altogether. So the total repayment is about $45,232 at the moment. Now, this is what I discussed with ANZ yesterday, and some offers which are available. First one, they offered variable rate for 2.69% if we would stay with variable rate, and unoccupied, and for investment interest only, investment interest only is 3.24%, comparable to Westpac. Westpac 3.29 is 2.24. And lower than Swiss Commonwealth, yeah. So that's that's the exact same structure as Westpac. If we NCBA, if we replace with AZ, exact same, and the repayment will be 49,600. You save about $2,600 per year. Plus, they will give you $3,000 cash back.
Mm-hmm.
Yeah, so that's the first option with ANZ. Now, the second option, I think it's better. First one, for the home loan, for the current home loan, instead of taking variable rate, we can take a 1 year fix, 2.09%. And the repayment is lower because the rate is lower. But the most important feature is they have offset account for 1 year fix.
Sure.
You can basically have this loan as a variable rate, right? Because the only difference between fixed and variable is variable you can do an unlimited repayment and a residual. However, if you have offset account, you are not going to use that feature. You are not going to make additional repayment to the loan and a residual. You simply use offset account. So that feature, variable interest rate loan feature, is not relevant if you have offset account, right?
Yeah.
But that's the feature exactly missing from fixed rate. But because the feature is not relevant, so So fixed rate is not worse off because it has offset account. But the rate is much lower, 2.09%, and also only fixed for 1 year, as you said. You want to have a 1 year and review every year. Yeah.
So you're saying this is better or
better?
Worse?
Better.
Yeah, it is better because you've got offset.
You can offset.
Yeah.
Yeah. So basically, yeah, and also.
Yeah, on top of a lower rate, you can offset as well.
Yeah. You have a lower rate and offset, and even though it is a fixed rate, but as long as you are not going to sell this property, it's fixed only for 1 year. Yeah.
Yeah.
And also, if for the remaining 3 years, for the next 3 years, the interest rates are not going to change.
Mm-hmm.
So it's almost 0.6% lower with the ANZ variable, 0.8% lower with Westpac.
Is that the inside information? Is it?
Yeah.
No rate change for the next 3 years.
Yeah.
Okay.
Yeah. And now for the idea, again, because the idea is investment, right? And interest-only rate is 2.69%. Again, it's cheaper than 3.29.
3.2. Yeah.
Yeah. It's also much lower and interest only. At 2-year fix. I think 1 year same. Let me double check the 1 year rate. Should be same. Let's just pick the lower rate one. Yeah, a 1 year or 2 year. And for bronze week, again, I also, because if you don't want to sell within 2 years, you can take 2 years. If you say I may sell in 1 year's time, you can take 1 year. Yeah. So that's also interest only. The rate will be same, 2.69%. Yeah. If you take this option, the difference between this option against again, they'll give you $3,000 cash back. ANZ.
Is it per loan or is it per application?
Per application.
Oh,
per customer. Per customer.
All right.
Yeah. Well, you just get it once.
Yeah.
And only for refinance. If you buy property, there's no cashback for buy, just for refinance. Yeah. So if you compare second option with ANZ with fixed rate and Westpac and the CBA, your saving is almost $8,000 a year. Yeah, and plus $3,000. So we're talking about more than $10,000 in the first year. Yeah. So I think that's the option I recommend.
Sure.
Yeah. This is the best one. That's the best option. 1 year fix with offset.
Yeah.
So you mentioned if you do refinance, and also because the value of the property now, your total three loans to your property, if you refinance, your LVR is 70%. It's under 80%. You're not going to pay lender's mortgage insurance. Yeah. Unless the banks value the property lower than our estimation. But still, we still have a 10% buffer.
Yeah.
Yeah. But before we do anything, we will do a valuation first. So we will know exactly how much the properties are value, and then before we proceed. However, the catch is to get $3,000, we need to submit a loan before the 1st of February. Yeah, so basically, we have two weeks left. Yeah. So, but you mentioned that your previous broker asked you to pay him some money if you discharge. How much you have to pay?
I don't know. I'll have to look about the agreement.
Yes, have a look at the agreement and say how much you have 2 ways. because get the savings if $8,000 plus $3,000, I think it's maybe worthwhile to pay him off. Yeah, just because if you don't refinance, you don't get the $3,000. If you if his fee is less than $3,000, you just use just free money to pay him out. And the other option, as I discussed yesterday, it is illegal to charge customer through clawback. We can charge customer upfront. So our service will charge you $2,000. Take or leave it. If you like to pay, it's okay. If you're not, doesn't matter. We don't offer. This is legal. This is legal. However, if you say, oh, I don't charge, if you refinance, then I'll charge you later. That is illegal.
Okay.
Yeah, they basically try to lock in customer in a disadvantaged position. However, if you challenge it, it may take you some effort and time, probably whether you want to go through this process or not. That's another matter, But legally, you can challenge.
So is there a brokers regulating body or something like that? Then I can take it up too, or?
Yeah, there's this called complaint. This called AFCA, Australian Finance Complaint Agency.
What's it again?
Australian.
Yeah.
Finance Complaint Agency.
Okay.
Yeah, you can complain, but they may support or business support. They may say, okay, sorry, this is a agreement you signed by yourself, because it is a legal thing. They don't necessarily want to get involved, but you can always raise complaint. You can always. Yeah. So as I said, because you signed the agreement with him, just like contract, you can challenge because in the Royal Commission, you remember last year, the Royal Commission, it clearly said the broker is not allowed to charge clawback.
Okay. Yeah,
clearly say if he does that, it was something wrong. Yeah. Yeah, he shouldn't do that. He shouldn't do that. He can charge you, but he can't reimburse the commission in that manner. Okay, now.
And another question.
Yeah.
So when you refinance, the bank pays you that refinance cashback. So after what period of time can you refinance again?
2 years.
2 years.
2 years. Yeah. There's a clause. You can't. They don't say you have to. But they may request to reimburse for 2 years. Hang on. Let me think. No, they don't have this clause. For example, if you refinance today with ANZ, if you refinance in the next 6 months' time, you must pay the pay. Sorry, refinance is not. For clawback, yes. You're talking about refinance or clawback of a commission.
Refinance.
Refinance for you. Cashback pay into no. There's no clause. Once you pay the pay. Clause? Yeah, no pay the pay.
Because my refinance for the owner occupied and the RDR property only happened in October last year.
Yeah, no clawback.
Okay.
Yeah, I'll double check, and I'll double check with Westpac and NZ banker. I'll let you know.
Sure.
From my understanding, there's no payback condition.
Yeah.
Yeah. So that's the situation. So that's the loan setup.
There's only one thing missing in there.
Yeah.
You know the smaller loans totaling up to 160, 165.
Yeah, I put all this into it.
You did?
Yeah, because it's 1.1 million already. How many loan accounts with Westpac do you have now?
5.
5. What's the total balance?
Let me work out for you.
I think this 5. I think it's lump sum into 400,000 and 380,000. Just want to just want to.
It all comes to 1,268,337 around. 1,268,337.
Ooh, okay. Now it's different. So how much the total balance with Westpac?
I'll type it up for you.
$950 altogether.
Yeah.
So what is for idea? How much is for idea?
Yeah. One moment. I'll get you the exact figures.
Idea 380 years. Ah, 402. Okay, then I got you. So this on top. So what was the purpose of that 160?
The purpose was to buy more.
Buy
more.
Buy more. What do you mean?
Buy more properties.
You use the deposit. You draw down as a deposit for other properties. Okay.
Yeah.
So do you know what is for what? Which loans are for which property? Do you know?
No, it's kind of all drawn out.
Okay.
Against derivative and idea.
Yeah. Okay. Basically, it will be 405,000 plus 160,000. So that's the. Sorry. This is secured by the. It's secured by the your home basically, right?
Mm.
Yeah. All right. In that case, it can be different. Yeah, 1.26. Yeah, you're right. Okay, now 126. Oh, that'll be 80%. We'll be very close to 80%.
Mm-hmm.
One option is if we do end up more than 80%, we can leave CVA loan aside. You know, we can leave CVA loans.
Or I can make a small contribution.
You can small contribution, exactly. Yeah. It really depends on valuation. Really depends on valuation. But very close, 0.25% even. You know.
Yeah.
Very small. Yeah. Let's do valuation first. Okay. So now another question: all these two properties are managed by an agent or by yourself?
No, agent.
Agent. Okay, that's good. Okay, that's good. Okay. Next thing I want to double check while we are here is to make sure ANZ can still service the loan. That's another thing we need to. I need to make a. So let's see this interest, this loan will increase, the rate will be 1.26 million. Let's see. Let's take the worst case scenario. Okay, still good. Still service. Still service. Still have a $31 surplus. Okay, should be okay. In terms of borrowing capacity, which is good. All right. Okay. Can you still see the screen?
Yeah.
Can you still share screen? Screen one? Okay, that's good. Now, for the new one, for the new property, for the land, you have. So what is your time frame to buy the land?
Well, there's no actual time frame set at the moment. It all depends how quickly we could get this done. You know.
Okay.
The approval process. Yeah. And then we can start going and making offers. Yeah.
I would recommend you to get a loan with ANZ as well, like take a 1 year fix for land, and for the construction you have to take a variable. It will be 2.69% variable, because you only take 6 to 9 months for construction. Once house is built, you can change to 1 year fix again. Okay. Yeah, the offset account. So the reset. So and also you don't need to pay annual fee and everything. Just everything you just package. You pay one annual fee. Yeah, I think that's the way. There are no much choices for construction. Everything else. Yeah. All right. What I do, I'll email this spreadsheet to you. You can play around, and you let me know. So next thing, what we do, you talk to your wife and make sure. I want to make sure she is happy with this. Everything happy with this structure as well, and then we probably have another conversation to confirm the structure, because you have loans. For example, you have a 565,000. Whether you want to structure split into variable or fixed and whatever, because you may want to claim tax for those 160,000. You can take this opportunity to structure the loan. So you can, for example, instead of making 380 for idea, you can make it 420. Then you can claim tax. Yeah. All right. Any questions before we conclude this meeting?
These two questions. One, supposedly the land and the build cost, either of it goes above our range.
Above your range.
Yes. So above our range of calculated of 900, what happens?
Then you may, at the moment, with this situation, your borrowing capacity is very tight. It's about $31 left a month.
Mm-hmm.
So which means if you are beyond the range, you can be in trouble.
Yeah.
Because that's the maximum loan you can borrow. The other option is you can cancel the credit card.
Okay.
Yeah.
That's easy. That's easy.
Yeah.
So how much?
Credit card is $6,000, right?
Yeah.
Yeah. If we take out the credit card, let me say how much. At the moment, this is $31. If you take out the credit card, if you take credit card is say it's $1 credit card limit, how much it will become? Say it's $1. Then you have about $300 left, I suppose. Come on. Okay, $259 left. $250 left. How much you can borrow? Way back 700, say 750,000. Let's see how much, whether 750 is doable or not. Just there, about 750,000. 750,000 divided by 80% is 935,000. So you can go, no, more than, not 750 divided by 80%. Yeah, $935,000. So you can go up to $35,000 more. Not much.
Okay.
Not much. Yeah, not much.
And as we were exploring, the option would be just to apply for a bridging loan and get rid of Brunswick.
Bridging loan is difficult, nearly impossible, because bridging loan, the LVR can't be over 70%. Now you are close to 80%. Yeah.
Okay.
The bridging loan is not available, unless you can sell Brunswick. You can get some cash.
Sure.
Because worth say that you can sell for $350. You loan is $315. You get about $35,000. Not much though. You still have to pay agent fee. You know, probably you will get about $20,000 out of sale if you do sell $350.
But after selling, does it mean that our borrowing capacity increases or remains the same?
Will be increase. I think it should be more. Should be more. Give me a second. I'll do that. If you sell Brunswick, which means we don't have rental, right? Rental is gone.
Yeah.
Rental income is gone. Yeah, we just take $1. I want to keep the record to change it to $1. And loan amount will be reduced by $315. Yeah. So 1, 2, 6, 5, 15 will be 945. 945. The other option to borrow more is instead of using interest only, you use principal plus interest. That will let you more.
Sorry, come again?
The other option is you take principal plus interest rate payment for your investment loan.
Oh, okay.
Then you can borrow more.
Oh, all right.
Yeah. If you sell Brunswick, yes, you can borrow more. You will borrow another 100,000. Just selling Brunswick.
Yeah.
You are on interest only. But if you take a principal plus interest rate payment for your investment loan, you can borrow. Because with the principal plus interest, one interest rate is higher, and also long term is shortened. It's changing from 30 years to 25 years. Yeah, so the repayment is higher, even though the interest rate during the interest only period repayment is lower, but the whole period repayment is higher. So you will borrow less with interest only.
So how much you can do more by P&I?
Okay, let me go back to, let me reverse to Brunswick. Just keep a Brunswick, because the setting is not something you can get it done straight away.
Yeah.
Say 1, 2, 6. Okay, it's principal plus interest. Principal plus interest. Okay. Okay, 550. So you can, without setting Brunswick, you can, the new loan can be will be about 850,000. 820,000, you still have surplus. Probably close to 850,000. So it will be over 1 million. The property will be over 1 million.
Okay.
Yeah. So yeah, 850,000. 850,000 divided by 180% will be 1,062,000.
Yeah.
It's about 160,000 more than your current estimate. It should be enough.
Yeah. Yeah.
Should be enough, right? Yeah.
It's so without selling.
Yeah, without selling. Just change from interest only to P&I.
Yeah.
Yeah.
That's a good idea.
Yeah.
Yeah.
Sure. And interest rate is lower.
Yeah.
Lower by 0.2%. Yeah.
Yeah.
Borrow more, the cost is less.
Yeah. All right.
Yeah, we take this into in mind.
Yeah. All right. Where to now?
But now, do you next thing I do? If I think first one, I will confirm whether the cashback are refundable or not.
Correct.
And secondly, you find how much you need to pay to the broker. Just the worst case scenario, you have to pay how much you are going to pay. You need to pay.
Yeah.
And I'll give you a hint. The commission rate is about 0.6%.
0.6% of the
loan amount.
Okay.
Loan amount. But if the loan is this, so when did you settle the loan last year?
Yeah.
What time? Which month?
Sure, I'll have a look. October, I think.
October last year, just 2 months ago.
Yeah, 3 months ago. Yeah.
Okay. Okay. So it depends on how much they will say. They may say, okay, you need to pay me $6,000 or $5,000, whatever.
7th of September.
7th of September. Okay,
Yeah.
3 months, 3 months, 4 months. Yeah, I think you check the agreement. How much he wants to get it back. Yeah.
Okay.
Yeah. September. Yeah.
Now, so that question comes. Another question comes to mind is now. Supposedly, his fees from clawback and the bank refinance cashback doesn't work us in our favor.
Yeah.
So I cannot touch those 2 loans.
Yeah, 3 loans.
But we still 2 loans plus the smaller ones. Yeah. So 5 altogether.
Yeah.
It's under that.
Yeah.
But the one with CBA has got no contract, no clawback, or no cashback commission.
Yeah.
Condition on that.
Yeah.
So would we be able to work with that to progress to a new application or no?
We can, but we can. No, we have two options. One is we just buy the land and build. We say we use ANZ. So we get ANZ, just buy land and build. That's one option. Leave Westpac loan aside with as they are and CBA loan as it is now. That's one option. Or we can refinance CBS loan as well. But if we refinance CBS loan, because the value will be over 90%, or over 80%. So you have to pay down that loan. Okay. Otherwise, you have to pay lender's mortgage insurance.
Correct.
Yeah. Again, what I do, I will calculate how much the lender's mortgage insurance will be, because they'll give you $3,000 cashback. It probably still if the cashback can cover that, probably still worthwhile.
Yeah.
You switch to lower rate, right?
Yeah.
And I think that's an option as well.
Okay.
Yeah. Yeah, we can definitely do something, you know, refinance or not refinance, doesn't matter. Yeah, we can definitely for the new loan, for the new lander and construction, we can go with ANZ. Potentially, we can use ANZ too for the ANZ CBN loan as well. So 530 times 80% is 280. So you need about $35,000. But however, if you use $35,000 from your saving, which means you are going to have a shortfall for the new purchase though.
Yeah.
So how much saving you have now? It's just 2,000 or 200,000 or more than 200,000?
Little more.
A little more? Yeah.
Yeah.
So it really depends on how little or more, because especially if you expect the land and building will more than 900, you need more in deposit.
Okay. No worries. Sure.
Yeah. I think the worst case scenario, we just leave CBS loan.
Yeah.
Yeah. Yeah. So
all right.
Yeah, probably that's that. But the only catch is if we leave CBA, leave Westpac loan as they are, that means that the new loan amount may be slightly less. One is because your loan is an interest only. They know, because they'll check the statement. They know interest only. They know it is interest only. And also, the other bank taking assessment rate is slightly higher for the loans with other bank. That's another thing.
Okay.
Another thing we need to consider. Yeah.
Yeah.
But let's work out the cost will be and how much you can, how much you need to pay the broker and how much. Now, for the cashback, I'm 99% sure it's not refundable. Yeah, but I'll just make sure to confirm with Westpac as well as NZ to confirm that. Yeah, and for the broker, you check up their agreement and how much it will be.
Sure, no worries.
Yeah, and then let me know. We'll keep in touch. Because if we want to refinance, we need to get it down ASAP, because we want to put everything ready and logic by the end of this month.
Yeah. Sure. Thanks very much, Dennis.
Okay, no problem. Ronil. Any questions, let me know. Give me a call.
Sure. Yeah.
All right.
Sure. Okay.
I'll email you that this worksheet.
Yeah, no problem.
Yeah. All right. Okay.
All right. Thank you.
Okay. No problem. See you.
Okay.
Bye. Bye.